Today, Bitcoin's in the green after the December read on inflation came in cooler than expected. The Senate Banking Committee releases a draft of bipartisan crypto regulation ahead of Thursday's markup. And Polygon Labs CEO Marc Boiron explains new acquisitions aimed at pushing the firm deeper into stablecoin payments. Welcome to CNBC's Crypto World. I'm Talia Kaplan. Digital currencies are in the green again this morning after new data showed inflation came in lower than expected in December, and as we get a fresh look at proposed bipartisan crypto regulation. By noon Eastern, Bitcoin rose to the $93,000 level, Ether climbed to $3,180, and XRP rose to $2.10. Okay, let's talk about the top stories. We're getting a full look at proposed market structure legislation ahead of its Thursday markup. The Senate Banking Committee released the full text of the bill, which includes sweeping provisions for stablecoins, DeFi protocols, tokenized stocks, and more. Now, Washington, the industry, and we here on Crypto World are still combing through the bill, but here are some of the highlights. The bipartisan bill amends the Securities Act of 1933 to include ancillary assets or network tokens that get their value from the efforts of the issuer. The SEC would be required to issue rules around those assets and require disclosures from the issuer. The bill also directs the SEC and Treasury to create specific rules that clarify how a person or group who control a DeFi trading protocol complies with regulatory requirements like disclosure, record keeping, and securities laws. The Treasury also has to define how DeFi platforms comply with the Bank Secrecy Act and anti-money laundering rules. Additionally, the market structure legislation allows financial institutions to use digital assets for all products or services they currently offer, but directs the Fed, controller of the currency, and the FDIC to develop capital requirements. And one other thing, the bill prohibits stablecoin issuers from offering rewards simply for holding stablecoins. Instead, those rewards have to be offered through the completion of a transaction or something like a rewards program. Now, that's a big win for the banks who pushed lawmakers to restrict how staking rewards were paid, and the industry is already pushing back on the provision. In a statement, the Blockchain Association argued the big banks were lobbying to protect their own incumbency, and the demand to eliminate stablecoin rewards were designed to choke off consumer choice. Both sides are now racing to lobby for changes to the bill by Wednesday night before its markup in the Senate Banking Committee on Thursday. Next, the CFTC is launching a committee to collect opinions on blockchain and other tech. Yesterday, newly appointed Pro-Crypto Commission Chair Michael Selig rolled out the Innovation Advisory Committee, or IAC for short. Selig stated innovators are harnessing technologies, including blockchain, to modernize financial systems, and that the commission will develop market structure regulations accordingly. He adds that this committee will play an important role in advising the commission on these matters. Members would include those from the financial industry, regulators, academics, and more. Last, a Kraken-backed special purpose acquisition company is seeking a $250 million IPO. Cayman Islands-based Crack Acquisition Corp filed an S-1 with the SEC yesterday, saying it seeks to offer 25,000 units at $10 each. If approved, it would trade on the NASDAQ under the ticker KRAQU. As a blank check company, Crack Acquisition says it intends to focus its efforts on digital asset firms. The filing also mentions it expects Kraken's participation by leveraging its relationships, industry experiences, and perspective. This comes a couple of months after we told you Kraken confidentially filed for its own IPO. All right, for our main story, today Polygon Labs announced a deal to acquire U.S.-regulated crypto payments company Coinme and digital asset infrastructure provider Sequence for more than $250 million in a move geared at expanding Polygon's footing in stablecoin payments. This afternoon, I spoke with Polygon Labs CEO Marc Boiron all about the deal and what happens next. Polygon Labs had a big announcement today. Your company is acquiring Coinme and Sequence for more than $250 million, marking the firm's biggest move to date into regulated U.S. payments infrastructure. Take us through why it was important for Polygon Labs to acquire these specific companies.
Sure. We recently announced a vision for what money will look like over the next 10 years, which we call the open money stack. And the idea behind this is one vertically integrated stack so that people can move money around the world from anywhere at any time. And the general idea here is that Polygon's developed a blockchain called Polygon that has been around for quite some time, done over $2 trillion of volume. And that is not the only thing people need to move stablecoins around the world. They also need on and off ramps, which is something that we're able to offer through Coinme. They need a wallet, which is their account for, on a blockchain so that they can hold the funds. They need to be able to move their funds between blockchains, which is something else that we get with Sequence. And so if we can offer this stack as one solution, then it allows one API to be used to offer money all around the world and move it all around the world at any time.
Now, I understand a big goal for Polygon is to become the Venmo of crypto, so to speak. How will these acquisitions help achieve that goal?
Sure. So I think this is always an evolution. So we start on the B2B side and we really target those use cases where right now there is the most need for a solution to move money around the world, whether you're a treasury manager or a company trying to pay a vendor somewhere. It's very hard to do that in a global manner. I think when we think about becoming a Venmo of the world, this is something that we have a vision for in the future. Right now, if you use Venmo in the US, it's fantastic. It's very easy to use. If you want to use the equivalent of Venmo to send money globally, it's very difficult to use. So that's really the need that we need to meet first. But once we've met that need, what I'd expect to see is that blockchains, including Polygon, are going to get broadly adopted. And once they do, if you are, somebody using an application like Venmo, you are going to have stable coins on chain already because you will have used it for another purpose. And at that point in time, it's actually just easiest to use Polygon to send your money than to use some other solution that exists in the market today.
And why was it important for Polygon Labs to acquire these two companies specifically now? Why did you feel the timing was right? Did the fact that we now have a federal framework in place for stablecoins in the US have anything to do with this move that pushes Polygon Labs deeper into stablecoin payments?
Yeah, I think this has to do with just an evolution of where Polygon's been at. Over the last 5 years or so, we've done over $2 trillion of volume on the chain. And so it has been broadly adopted. And when we look at the payments specifically, what we've seen is a straight up and to the right increase in payments, where major players like Revolut are done close to $1 billion of volume. And so when we look at that, what we see is a very real need. And when we talk to the market, what we understand is that need is not being fulfilled. We've got blockchains that are meeting their needs. We've got wallets that are doing things, but nobody is offering a solution that makes it easy for everybody to come on chain. And so from all of those conversations, it became very evident that if we can package up a solution that offers the blockchain with the wallet, with the on-ramps, with the interoperability between chains into one payment solution that can move money globally, that would be welcome in the market. And this is really when it's needed.
And when will the deal be finalized exactly? What happens next? And what will change for Polygon now with these acquisitions?
Sure. So the Sequence transaction is actually going to be finalized in the next 10 days or so. It requires a court approval in Canada for Canadian purposes. The Coinme acquisition is the acquisition of a regulated entity with money transmitter licenses, which requires state approval for change of control. And so we will be applying for those that change of control to happen. And usually the process is somewhere between 4 to 6 months. During that time, we're going to be working on the technical integrations. And really the biggest change for Polygon is going to be a major one. It's moving from just an infrastructure company that provides a blockchain to providing comprehensive payment solutions. And that is obviously a very different set of skills and one that we learn a lot from Coinme in bringing over to us.
Focusing on stablecoin adoption, what would you say are some of the key components to achieve broader adoption other than regulatory advancements? And how does Polygon play into all of that, especially after these acquisitions?
Yeah, so I still hear commonly, both from businesses and individuals, that stablecoins are supposed to be easier, but that they aren't easier. And this is really important because they should be. They really do flow much more easily with certainty at lower cost. And so the question is like why that hasn't been the case. And a lot of it is fragmented solutions. Is you need to talk to a blockchain company or use a blockchain. You need to talk to a wallet company to procure one or use a wallet. You're going in all of these different directions, getting pulled to 5 to 6 different solutions to actually use stablecoins. And when we acquire Coinme and Sequence and integrate it with Polygon chain through the open money stack, now instead of looking at 5-10 different APIs from 5 different companies, you're looking at one API from one company, which is much easier to integrate.
Now, we also learned today that digital asset infrastructure provider Bakkt agreed to acquire stablecoin payments provider Distributed Technologies Research. And we're hearing more about these sort of deals recently. So how does Polygon plan to differentiate itself from competitors who are also moving deeper into stablecoin payments? And how do deals like this impact the industry overall?
Yeah, so I think that's a really good question. When we see any area where there's a huge opportunity, there's always a lot of money that is spent and overbuilding that happens. I don't think that's happened yet with stablecoins. The market is so massive that there is going to be a lot of development until we ever reach saturation. When we look at the opportunity, we look at it as an opportunity to grow alongside. The stablecoin market is going to 10x, 20x, 50x over the next few years. And it's really about grabbing a portion of the market share, and others will grab another portion of the market share. And we're going to have an opportunity to do that. And the biggest reason we're going to have that is because of our kind of historical background. So building a blockchain that is available in every country, we have applications all around the world. So whether it's, we have Revolut building on Polygon in the EU, we have, Stripe in the US, in Southeast Asia, we have companies, we have Flutterwave in Africa, we have several LATAM based applications building. So we already have global infrastructure and global distribution, which makes it much easier for us to sell infrastructure that is going to be in applications and regulatory frameworks that are going to be used like all around the world, rather than what currently exists in most cases, which is a regional approach. It's an approach that exists only in a certain region. But when you want to move money all around the world, you want that global reach. And that's an advantage that Polygon has that really doesn't exist with others. On top of the fact that we control the underlying infrastructure. We're the ones who develop it, push out new releases. And so we're able to influence that in a way that while it is decentralized as a blockchain is, we're able to push releases that are consistent with what we want, what payments companies want and what consumers ultimately want, which is different from when you're building on an open platform where you're not able to influence those outcomes.
Okay, that's all for Crypto World today. We'll be back again tomorrow, and we'll see you then.